I'm Jon Marino, Senior Editor for Private Equity with The Deal, and I'm here today at ACG New York's Manufacturing and Logistics Conference in Midtown Manhattan. I'm joined now by Bob Landis, who works on origination for deals with Riverside. Just to lead off, I guess, what are some of the bigger themes that you're seeing in the manufacturing sector, and how is Riverside specifically working on that?
Well, we've been around 25 years, and our legacy has always been manufacturing. During the downturn and over the past 10 years, as more and more companies decided to have a China strategy, and by that I mean, should we manufacture overseas? And if you don't have a China strategy, that means you either haven't thought about it or you said it doesn't make sense. But during this period, over the past 10, 12 years, as we saw more and more companies leave the United States, and quite frankly, we actually set up some operations in China as well, we started focusing on other industries, so we broadened our depth, never leaving manufacturing, but doing a lot more in healthcare, services, technology, areas where manufacturing wasn't as key. Last year, we started a brand new initiative, and one of the partners raised his hand and said, I'm seeing manufacturing come back to the United States for a variety of reasons. Length of time from purchase to delivery to the United States, quality issues, the fact that it's getting more costly over in Asia as their economies develop. So we're coming back to our roots. Not that we've ever left them, but more and more people are saying, that's right, they do manufacturing.
All right. So specifically, I guess, in the U.S., outside of China, what are some of the businesses within the manufacturing industry that are really getting the most attention from financial sponsors as opposed to the strategics?
We have 6 industries that we've focused on, and within those, one is healthcare, healthcare services, but also we have partners dedicated to healthcare medical devices. And we've been very, very lucky and successful in purchasing companies in that area. Precision Wire, G&H, and some others in that area. We've looked at several in the packaging area as well. We just bought a significant company, Overton, called HDAM, in the manufacture of heavy gears, and we're looking to build out that as well. Not any specific industry, but nevertheless, it's an important cog, no pun intended, in all of the manufacturing operations. So we're looking at areas that are growth. We're looking at building products. We're looking at a lot of areas that are starting to come back after the 2008 recession.
It seems to me like one of the small legacies of the Riverside Company is that you folks have really built out a lot of platform businesses as opposed to just doing one-off acquisitions and maybe focusing on capital operations or stuff like that. It always seems to me like towards the end of the year, a lot of family-run businesses come onto the market. For manufacturing, what are some of the common themes you're seeing with family-owned businesses being sold back into the space where private equity can possibly bolt them onto a platform like the ones that you help originate?
Sure. In the United States, we have about 45 of our 77 platform companies located in North America, and by that I mean Canada as well as the United States. Some of these family-owned operations, they're looking either to exit, second, third generation, or a second bite of the apple, or they're thinking about retirement planning and saying, I want to grow this business, but I don't want to use my capital one more time. I need some partners, one who can help me take it to the next level, and I'd like to go to bed at night and sleep a little bit sounder knowing some of my eggs are taken out of the basket and put in my backyard. We saw a lot of opportunities last year because of the tax reasons, and a lot of the deals in 2013 were accelerated back into 2012 to take advantage of that. So I think what you're seeing are a lot of companies saying, I can't compete against the strategics. I'm seeing some of the international companies come to the United States. I need a partner that can work with me that will help me with more than just money, and I think Riverside's one of those. All
right. Where have you seen some sector multiples go over the last 12 to 24 months? It seems like when we started 2013, the deal scene was a little bit dry. Folks, I guess, had a little bit of a hangover, so to speak, from the fiscal cliff. But now it seems like the deal scene is picking up a little bit.
It is. 2012, we saw a huge ramp up in the multiples, and I think it's partly driven by a little bit more confidence in the U.S. economy, not a lot, but a little bit more, but also by the fact I think that the lenders, either because they're more comfortable or maybe they're more aggressive because they haven't made their budgets, or other competition, we're seeing very, very healthy multiples. One company that we bid on 18 months ago that we lost to a private equity firm down south, I think they paid 6 or 7 times. They just recapped that at 6 or 7 times with debt. So we're seeing some very aggressive lending. I'm not certain that the Fed, if you saw the Wall Street Journal today, talking about re-examining the banks and what they're doing. Maybe the Fed and the government isn't excited about that, but those in private equity certainly are finding it very favorable.
And right now we're kind of at a point where we're at historic lending lows, at least in terms of things like junk bonds, et cetera. Are there a lot of private equity firms that are kind of taking the opportunity now who run manufacturing companies? Are they going out and saying, we're going to try and either extend our debt or maybe make it a little bit cheaper for us to maintain, or are they really looking still more broadly at M&A?
I'd say both. If you have high debt, you should really be thinking about a recap if you do not plan to exit in the next year or two. It's not unlike a housing mortgage. If you plan to stay more than 3 or 4 years, pay the fees and recap your debt. There's been some indications that the interest rates are starting to back up, but they're still at historical lows.
Yeah.
I think also, though, we're looking at platforms just like anybody else. Our limiteds want us to invest in our companies, and they want us to find new add-ons as well as new platforms. So we have to put capital to work, and we're all in that situation. Either we're raising new funds or we've got dry powder. They expect us to use it.
All right. Thank you very much for joining us this afternoon.